Oh, okay, so let's take a look at this here. Right, so this was a previous high, right?
Mm-hmm.
So I'm drawing the line here. So price shoots up, breaks, forms this high, and then retraces. So your question is whether or not, if it instead of bouncing off here, if it breaks here and then bounces.
Mm-hmm.
Right, okay, so that is still a valid retracement. We are not, right, so because this part right here, so we have basically topped out. We have formed a high, okay?
Mm-hmm.
So now in a retracement, we are now looking for us bottoming out. So we're looking for the low. The low, it's still a valid retracement as long as it remains above this point right here.
Okay.
This is the previous low. If it does not break here, then we're still looking at a valid retracement. It's a very deep retracement, and we would be looking at other opportunities, most likely, depending on the kind of trader that you are. But it's still a valid retracement. It can bounce off here. This is a relatively weak structure. Or it can go all the way down to here and bounce up. It's still a valid retracement as long as it remains above this previous low. Right?
Thanks.
Yep, you're welcome. All right, again, sorry about the interruption. So we'll continue. So looking at the downtrend, it's basically the same in reverse. All right? So we have, we have an initial high. So we have initial high. We have an impulse to the downside. So here the bear sign control. And from this point, we're having a retracement. So we have formed fresh lower low. Out. And market retraces to the upside. It's still a valid retracement as long as it remains below the initial high point. If it pushes past and breaks beyond the previous high, it is not a downtrend. It's not valid. Mm-hmm. So we have a lower high. Price then pushes back down and pushes past the previous low to form another low low. It retraces. It can retrace up to here because here is where the previously bounced before. And just to take a little bit from next week, this is the bottom is referred to as support, and the ceiling, you hear that also that term is referred to as resistance. Support, once broken, becomes resistance. So it can bounce up here, or it can bounce higher up. But again, it cannot break the previous high. So we have a lower high. And again, price ideally, again, to continue the downtrend, would have to push past the previous low and form a new lower low. Now, looking at it in terms of candlesticks, we are pretty similarly to the previous, what we're looking at on an uptrend. All right, so we have this. No, previous downtrend. So this right here is forming our lower low. And okay, so let's say this forms our lower low. Price retraces, forms a couple of bullish candles, and then returns to the same price level. It long as it does not close below the previous low, we are not looking at a new structure low. Price can, during the session, can push all at once past, but if it bounces back, if it gets rejected and ultimately closes above, even with a wick as long as this, it's still not a new structure low. It hasn't actually broken this level right here. So what can happen next is basically price can bounce again and continue up, or in the following candles can decide to break and close beyond. And then that's when we're basically looking at a continuation of the downtrend. Yes, Mike, yes, this will be recorded. Right? So looking at an actual chart. So just stick with this chart here. We're still looking at the Kiwi dollar. Let's see. Right. Let's take this, for example. We have market clearly has topped out right here. Right? So right here is our high. Our initial high, our starting point, if you want. Now, price will push here, and this right here is the target low, basically. If you want to find out if you're looking at a bearish trend, then this is the price level it has to break initially. Okay? So as we can see, price pushes to that zone, is rejected, and forms a lower high, and only with the following impulse, this candle right here, it ends up pushing past and breaking the point. It doesn't do that for much, so it's basically sitting at this zone. But the next retracement, again, is another. So we have here a lower high. I'm looking again at another lower high. As price retraces to the lower high, then yet again has to break this level right here, and it does so on this. Now, as you can see, this market is not really willing to go bearish, right? It's very sloppy, it's very slow to pick up. Only once we bounce off of this zone, this area, the market really picks up and forms strong impulse legs. Here, again, it comes back, as you can see, like a magnet, comes back to the same zone to form another lower high. And market pushes past here, beyond, to form another lower low. Sorry, this should be a lower low. Market pushes up. Again, lower high. And then from here, it just continues a very strong impulse to the downside. And so on. We can have another tracement here. And it continues. So basically what you are looking for, once you want to identify whether or not you are still in a downtrend, you're looking at the previous low. and you ask yourself, has the low been broken? Has this price level been broken? And the answer is yes, you're looking at a continued downtrend. The answer is no, then you're looking either in a trend reversal or a possible consolidation. So as I was mentioning, consolidation. Let's look at what a sideways movement would look like. Consolidation is basically when the market does not know what it wants, right? So let's say we are coming out of an uptrend, right? So this is a previous low. Let's say we are starting off here. Low, and we hit this high. Now, and it may retrace and form a high low. So far, so good. We're still in an uptrend, right? But then the market will do something like this. It will form a lower high. And will clearly be rejected at this level and pushed down to now form a lower low. Right? So we're pushing past this level, we form a lower low, and we say, okay, maybe you're looking at trend reversal, looking now at a downtrend. But the market would then again push up higher and form yet again a higher high. Right? So this is when we would refer to the market as being in consolidation, in a sideways movement. It will move erratically at times, right, and form lower lows, higher lows, lower highs, and it just be all over the place. And there's no clear direction that you can make out. So that's when we would refer to it as being in consolidation. And this is where market is said to be tired, right? It's tiring out. It's not, doesn't have a strong impulse in either direction. And it is basically just collecting strength again to break out in one direction or another. And then once it does break out, it typically, so let's say we have here an area where price has rebounded within that consolidation. Say price breaks out and then retrace. And it typically then, if this breakout is referred to not a false breakout, but an actual breakout, it will rebound off of that previous area and then continue. And the same can be true for a downtrend. Yeah. But this right here, this here is what you see is when we talk about a consolidation. See if we can find somewhere where the market has clearly been in consolidation. Here, for instance. Okay, so let's look. We're starting from this point right here. Okay, we have an impulse. All right, we're making higher highs. Very good. Retracing. Okay, higher low, still within what you would refer to as uptrend, barely, but we're still in it. Right, getting very close. It's already, it hasn't pushed past it, so it's still looking like we're in an uptrend. But then we're not making a new higher close, a new structure high. Right? So we are up until this point. higher low. We're still not breaking past it. And all of a sudden, we form a lower low. So this is what when we refer to as a market being in consolidation, right? It's very choppy, all over the place. It's not really giving us a very good idea as to what direction we're going. Are we going uptrend, downtrend? So this, depending on the kind of trader that you are, and that you ultimately, for assuming that most of you are here now because you're now starting off and you're interested in it, there typically traders can be put into certain categories. It can be a trend continuation trader, where when you see, okay, we're having an uptrend and you see the market retrace, we're buying on the low point and continuing along with the trend, right? You get basically bonus points, because I saw a very good comparison. When you're going into a subway at rush hour, you want to go with the masses. You don't want to be fighting against the stream, right? So trend continuation traders have that mentality. And then there are counter trend traders who are waiting, basically betting that if price hits a certain level, like this, for instance, would be the ideal for a counter trend trader. It hits a certain level, it gives you all the signs that trend is stopping and reversing, and you enter at this point and you're going against the trend. And sometimes all you're getting is a short retracement. Sometimes you're catching a trend reversal, and that would be a counter trend trader. And then again, there's some who use advanced techniques to see patterns, recurring patterns that give them a very good trade entry within a consolidated market. Right? So that's basically how we can define the different stages that a market finds itself in. Okay, so that's really the meat of our session. Anyone has a question at this point that you want me to address? Let's see, chat is.
Thanks.
Yeah, absolutely. I have, before you guys go and check off, I want to hand it over then to Jay. If Jay is here with us. Jay. Right.
Oh, I'm here. Hold on. Let me put a shirt on then.
Oh, no.
I'm over here watching the game and everything. All right, let me put a shirt on.
All right. So Jay is our mentor. He's our lead trader, and he has agreed to also give us some more pointers. So, yeah, thanks again for joining us, and take it away, Jay.
Yeah, no problem. I was just watching. I'm over here watching the game. All right, just put a shirt on. I got you right now. Damn, just hopped into bed. Let's get it. All right, I'm gonna jump onto Trading View. If you stop sharing your screen, I'll be able to.
Let me see how I can do it.
Yeah, I got you, brother.
Up, stop share. Here you go. Go for it.
All right, so you're talking about trends and continuations. Everything you said is depicted perfectly. In my honest opinion, I'll start sharing or start showing. What's up, guys? How's everybody doing? I just had to put a shirt on real quick. My name is J.M. Pips. If you guys do not know who I am, I'm one of the founder, the creator of FX Legacy. Also the individual who has been teaching Marcus and also alongside Caribbean Blue. The reason why you're on this call is because I've been able to now give them the type of education that's needed for them to now start educating other people and really duplicating the system, right? The system, what I mean is by ForEx, by being able to profitably trade in a manner where you can actually become financially free. So I always teach these individuals on a daily basis, twice daily, to make sure that they're understanding every aspect within the markets. Now, they're doing something extremely special for you guys. They're doing it like basically in order. I think last week they just went over like structure. This week they're going over trend continuations. And just in general, understanding what they're teaching you right now is extremely important because there's only three things you really need to understand about the markets: the psychology. And I'm sorry if there's any women in here. I apologize, but this is literally this is a financial term that they actually say. I used to work, I wouldn't say worked on Wall Street, but I worked as a market maker for a little bit until I quit because I just really didn't like it. Grab your balls, right? That's the second thing. You got to be able to understand what you're doing. You got to grab your balls and trust your analysis. Be able to understand what the market is doing in such a fashion where you can feel confident, right? And the third thing is execute. executing the actual trades to maintain or to create some type of profits is always the one thing that we want to make sure that we're doing. So what I'm gonna do real quick is, now that I got TradingView open here, let me just close this. I'm like watching the game. I'm in like my office house right now. So I'm gonna start sharing my screen. Bam. Then we're gonna go over a few things. We'll stay on for like another 5-10 minutes, just real quick. Kind of explain what I mean about as far as trend continuation. He basically, Marcus himself, spoke about everything that needed to be spoken about as far as trend continuations, fake outs, everything in general. But what I like to do is obviously put in a little bit more confluence when I'm looking at something like that. So if somebody can unmute their mics really quick, doesn't matter who it is, I don't care if you're an affiliate or not, give me a pair, give me a time frame. USD CAD. Time frame.
4 hour.
4 hour. Perfect. All right, so we're going to look at the 4 hour. And the reason why I like to do that, and I'm just going to delete everything so so that way it doesn't look like I'm just, making this up. We're going to do this in real time, just the same way that Marcus and Raquel does it. Right? And the same time that I do the majority of my markups, except for, when I teach everybody in the legacy team, I don't necessarily delete everything. We keep our markups relatively the same. We don't really touch them because we want to make sure that what we're saying is true and that it actually happens, right? I can sit here and say, we're going to do this, we're going to do that, and it bypasses it. But for the majority of the time, when we leave our markups up, it does exactly what we're saying. So real quick, since we're on just the trend continuations, consolidation range, and candlesticks itself, we're going to look at a few things. Just on USD CAD, that's going to be the only question that I'm going to answer. I actually have to leave here in a second. My friend's fighting, or not fighting tonight, but he's having a fight next week, and I'm going to be traveling with him for a little bit during the week and trying to just help him out with that. So we got to catch not a flight, a bus. Actually, I wish it was a flight. He's not that professional yet. They're just paying for his bus and not paying for his flight yet. So what I like to do is, what I like to teach every affiliate, such as Marcus and Raquel, Caribbean Blue, the first things I like to really teach them is just the structure itself, being able to understand the most accurate places in the market to profitably place a trade. Now, I understand that right now USD CAD is in a bearish trend. You don't need to understand, you don't have to draw a trend line. You don't really need to be a genius to see this. And the reason why I always tell people that this is extremely easy is because it's as hard as you make it. Now, perfect. That's all I did. I just drew a trend line. Perfect example of what we could be looking at for the possibilities of next week. Now, we're not done with this yet, right? We have to understand that right now is this trend, this bearish trend. I'm just going to draw a line from this high to this low. So that way you can understand the impulse, and I'm just going to show you what the impulse is. I'm not going to write it out. I'm just going to draw it. Impulse, right? That's the start of this bearish move. This is the start of our correction. We also will have extensions within our impulse, but that's not important because what we're looking at right now is this being the most ultimate low, because now we're coming back into former areas of structure. Now, what I want to look for is a possible continuation to the downside. Now, the only things I really have working for me is a possible, I'll just get rid of this because we understand what the impulse is. Don't want to confuse anybody. We have an initial trend line. We see this trend line being respected from here. This is our trigger spot, right? The connective point where we started to draw our trend line from. Connective spot. This is our triggered kill zone. So what do you think? Just understanding, one, we're in a trending market, so we want the wind at our back. We don't want to get into a buying opportunity unless we have a really real obvious opportunity, something that I'm going to be looking for, right? Something I can clearly see. Now, I'm not telling you guys to go short on this because me personally, I don't believe, right? Well, actually, I do believe that the dollar is going to be in a form of correction, so this actually might work out. So I'm going to leave this up because this might be a trade for the affiliates tomorrow morning, maybe even later today, depending on how the markets want to open up and work for us. But now that I'm seeing this, there's only a few things I need to understand. One, the trend. I see that the immediate trend, right? Even on the higher time frame, if I come up to the daily, right, I'm going to show you something extremely important. I have a swing trade account. I really don't tell even the affiliates about it. I mean, they do, but when you look at trend continuations and breakouts and a reversal, identify what's initially going on with the initial trend. We're in this channel for so long, right? And understanding how the markets work. Now, this might get a little advanced for people, so I apologize. But I understand a few things. I understand that this is my A leg to my B leg. It's my possible C leg extension down, right? Now, we were channeling in this wall for a little bit, just a small little channel. You can clearly see that. Respect here, respect all within this range. Now, what I like to also teach everybody is advanced trading with the minimalistic understanding, right? Just the most simplest way of how to trade. Now, I could do this, which I do, and which we all do. We understand what the, I forgot I'm on my new computer, on the good one. So I understand A, B, C, D, possible E. Now, what we're usually supposed to have is a either push to the downside with our E leg, or if we have respect within the E leg, we understand that the next possible reversal is going to be within that next push, right? The E leg will determine whether or not it's going to break out or even respect that level. But that next impulse and the correction to the downside or the upside is our imminent reversal. Point blank, nothing else is going to happen. You can clearly see in that being depicted here. Now, I'm just going to get rid of everything. So I clearly understand that shapes and patterns do run the market. Candlesticks, trends, continuations, respect within initial structures. That's also going to give me a positive or a highly profitable trade. But if you look at this entire impulse to the downside, that's not something I want to forget. Now, the reason being, we're going to come right back into what Marcus was speaking about. If you look at current price, and I'll just highlight current price for you real quick. Damn, current price, right? Right in that box, because we came right back into previous structure. Now, it's not always going to be to the pip, but it's going to come to a general area within market price where we can look for potential entries and potential trades. Now, if you can clearly understand what I mean by that, right? I'm just going to draw a few circles. They might be a little bit too exaggerated and big, but I'm just highlighting a general aspect, something that you need to look at in order for you to say, well, I know that this was choppy here. It broke out a little bit, broke down a little bit. That's just a consolidated range. That's telling me that within this price area, it's extremely important for me to look for a possible entry. Jump down to lower time frames, because right now we're on the daily. I think you said the 4 hour, so I apologize for jumping on the 4 hour or the daily when you said the 4 hour, but just giving you a broader aspect of what we're looking at. So I clearly identified that even before we had this sharp impulse move up, right? This impulse should have never stopped. But where did it correct down into? Simply put, right back into previous structure. Now, what Marcus was telling you was higher highs and higher lows. Extremely, extremely important, because now look at the next correction to that impulse, right? I'm looking at the initial, the actual move of the entire markets on a higher time frame. Now, just real quick, you understand what I mean by this. When I say, actually, let me just measure this out before I sit here and talk shit. Yep. All right. So cool. So real quick, before I wanted to make sure that the measurements were correct. It didn't quite hit, but I still placed the trade only for the simple fact that it is coming back into an area of structure. When you're looking at harmonics, and the reason why I say when you look at harmonics, for anybody who does not know what harmonics is, it's just a highly profitable, high probable opportunity to get into the markets, understanding not just the pinpoint proportions as far as measuring everything with your Fibonacci retracement and Fibonacci extension tools. You're going to be able to pinpoint the next entire move. So this entire move was made, and I was only looking for a lot of USD CAD sells. I've been on a short since here, just understanding structure itself. My stop loss was here, my take profit was here, and I'm going to get to that here in a second. Actually, my take profit was just maybe a little bit further down because it hasn't hit yet. But what I'm seeing is understanding the simplistic manners, right? Just understanding the small facets within the market. I understand the impulse, break of structure, came back down to retest. I understand that right now that this is my high point. I'm going to draw it out for you guys so that way you can clearly see that. Bam, high point. Now, did I make a lower high? Absolutely. Because this high could not pass this high. So I understand that right now we're looking at a bearish market. We're not looking for much buying opportunities. Obviously, on smaller time frames, we can in fact find a possible trade for a for a shorting or a buying opportunity or a shorting opportunity, depending on what the trend is and depending on what the time frame is. You're always going to be able to find and pinpoint these accurate levels. But I always tell my affiliates and everyone within FX Legacy who's associated with us to make sure that they're understanding the actual trend within the market, because you want to make sure that you're coming, or not just the trend, the most important aspects within the market to get into alongside the trend. I would have went long all the way up until here. If I would have seen this sharp impulse move down, I would have probably taken profits here on the daily, right? Because a higher time frame, because the lows that needed to be broken were. Now, I understand on a smaller time frame, I'm not really worried about that. I'm going to get in, get out real quick. But if I'm trying to decide where the market is initially going, especially right now, the market is going to open up here in like 2 hours. So we're marking up our charts, trying to depict and define exactly where we're going to get in. Mark up the charts before they initially even open, before the market's open, rather. So I'm looking at this in two aspects, right? I see this impulse move down, respective structure, came back up. Now we have our trigger point for an initial trend line. It's respecting that angle. Bam, I have another confirmation. Now I do, in fact, have a break to the downside right here. It broke daily structure. We're coming back up to retest that daily structure. Now, just two things I always take into correlation or to take into matter when I look at shapes and patterns and anything within the markets. The one thing I like to look at is obviously the fundamental aspect within everything. What I mean by fundamental is what is the initial geopolitical factors correlating with the with that said currency, such as if I'm trading the euro US dollar, I want to make sure that the euro is weaker than the dollar if in fact I am selling, right? Because I want to go with the dollar. But what I do understand is that these shapes, patterns, reoccurring things within the markets always present themselves in a very harmonious manner, if I would. And what I mean by that is just understanding this. Just going to draw from this impulse to this left shoulder, to the collarbone, to the tip of the head, right back down, right? Because we're looking at this. Now we're looking at our right shoulder. Now, the reason why that's important, and I depict that to you guys, is because I do believe right now, and we're not going to go into it right now. That's way too information to give for free. That's all for my affiliates. They get everything. We're just giving you guys general information, general knowledge, understanding on how to look at the markets. So that way, hopefully, you could really get something out of this and put it into your own trading. But I'm not going to go too far into it. That's all for legacy affiliates. I can't. That would be so unfair for them. But I see that right now, also understanding the correlation between the fundamentals, the fact that the US dollar, because not everything you see on the markets or on the charts is what we should be trading. You have to understand what the initial pair, what they're doing, the initial currencies, whether they have high-level news coming out, whether there's been a change in politics, anything, doesn't matter. When we saw Donald Trump come into presidency, we saw the US dollar actually move greatly. And it devalued the dollar. Right now, we're looking for an increase within the dollar, or correction. Now, I'm understanding the simple fact that right now, I'm looking at a potential inverted head and shoulders pattern. Now, why is that important to me? Well, one, we're coming back down to a daily structure zone. Two, we're looking at a possible inverted head and shoulders pattern. I clearly drew that up for you here. Now, understanding candlesticks, right? Candlesticks play a huge role within structure and trend continuations and a possible reversal as well. But I understand a few things. In order for me to see a trend continue, I look for bullish or bearish engulfing movements. Now, I clearly see within just a day's time span that this entire candlestick that I'm highlighting right here is extremely bullish. It actually broke and closed above the initial highs that it needed to in order for us to look for another possible extension to the upside. So when I see something like this, understanding how the markets work, because you're not just going to trade one way and say, well, fucking MACD works and Fibonacci works. No, because you're fucking stupid if you do. Excuse my language, but it's the truth. If you look at it in many different aspects, if you look at it in a more, I would say, like a trader, not somebody who's just looking for signals, not somebody who does not know what the fuck to do. If you look at it and you analyze it in a really accurate manner, you're going to be able to dictate exactly what's going to happen. Now, I did end up going, I think it was long on USD CAD, or it was one of these pairs. I did go short on USD CHF, and that completely stopped me out. But we don't win every trade. But I think I did actually go long on USD CAD. I'm not too sure which one it was. I think it was this, because I understood the shape and the pattern. at a specific structure level, understanding the initial impulses, the trend, the continuation, and a possible reversal dictated by these imminent patterns and shapes that are formed. I'm just going to draw it out for you again. So what I like to do is, and I'll leave it at this, and then I'll let the legacy people take over, because Marcus and Caribbean Blue, like, they have been a godsend. They are literally the best traders that I personally have been able to teach, alongside every single individual that has been associated with FX Legacy. They're all going to be able to do sessions. They're all going to be able to duplicate this and teach every single individual on how to specifically trade, because I do this and then some and a lot more. Give them everything. You're only getting like 5% of what the hell we do, to be completely honest. But that's because even with the 5%, you're not really getting even 2 or 1% from your initial team or individuals that are trying to teach you and overpricing you and just making sure that you just build and shit. Trust me, I already know how that shit goes. But what we focus on is literally just the trading aspect and the education aspect. And with education comes profits. This is like going to the gym. I always tell people, I like to go to the gym just simply because I like to work out. But the product of hard work is muscles. And trust me, I ain't complaining, right? Because I'm chilling at this point. Money, working out, everything. But the product of the hard work is progression. And when you could clearly sit back and say, hey, look, I understand what's going on. I see that this is most likely going to break the structure, and I'm going to look for potential buys. Now, why would I say that? Why would I say that I'm looking for potential buys at this specific structure zone, when this is supposed to be a selling zone at this point, because we're coming back to retest the market, the specific pattern, the specific shape, understanding where the market needs to go before it even makes its strong impulsive move anywhere it wants to go. So I'm literally looking at this bullish engulfing candlestick at a specific structure level. And the reason I'm going to get rid of this blue line so that way I can show you that. When we look at something like this structure, understanding where a continuation or a trend is stopped at, and we're looking for a potential reversal and a possible continuation to the opposite direction, we have to dictate and identify these key levels as far as support, resistance, however you want to call it, structure. But it's not just support and resistance. It's finding the most minimalistic price where you're going to find action, right? And I'm going to reverse that real quick. My strategy of trading is price action. People always ask, what's price action? It's fucking very self-explanatory. You're going to have a specific action at a specific price. It is up to us as traders to determine, find, dictate where that's initially going to be. And my specialty is finding where those levels are. So what Marcus has basically had told you and educated you guys on today was extremely important, because now you're going to be able to say, hey, look, I understand where the trend is going to be. I understand where the continuations are. I understand what candlesticks needs to be looked at in order for me to get a possible trade. Now it's up to me to apply everything that I've learned and be able to execute in a fashion that's going to be profitable for myself, my team, and my business. I don't care what team and business you're from. I don't care what it is that you do. As long as you're receiving the education and value that's needed in order to become a profitable day trader, whether it's coming from myself and FX Legacy, Marcus and FX Legacy and his Elevate. We also have, Caribbean Blue. You're going to be able to use these resources in order to become profitable. What's up?
Sorry, man. We have about 15, 20 seconds left in the session.
Are you good? I appreciate you guys being on the call. If you guys have any questions on the call, by all means, ask Marcus and ask Raquel or ask me, and we'll be able to help you within your trading career. We appreciate you being on the call. We're running out of time, so thank you so much. Marcus, thank you. Raquel, and thank you as well.
All right, everyone. Thanks for joining us. We'll be